Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod, a rare interview with billionaire investor John Paulson. He's a key surrogate and fundraiser for Donald Trump's campaign. The former president has threatened a 200% tariff on John Deere if the company offshores, but Paulson says Trump's tariffs are good strategy.
What Trump wants to do is create an American manufacturing powerhouse and using tariffs as a way to level the playing field.
How he sees the two candidates for president measure up.
One's more risky than the other. Do you not see it that way?
Absolutely not. You know, I'll go back to repeating, we've had 4 years under Trump. It was a very low-risk environment.
And Paulson responds to concerns about the former president's character.
I would disagree on how other people view him. I think he'd be a great president, and he'd be a great president for all Americans.
That lively conversation and all the rest of today's news that got us squawking. It's Tuesday, September 24th. Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody, and welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Joe Kernen and Andrew Ross Sorkin. And there was some news from China overnight. The central bank governor holding a rare news conference announcing plans to cut the amount of cash the banks need to have on hand by 50 basis points. The central bank governor didn't say when the new policy would take effect, but he did say that it would be in the near term. Banks also cutting the 7-day repo rate by 20 basis points. That's double the cut that economists had been expecting. China's 10-year government bond yield hit a record low of 2% during the speech, but the stock markets there took off. Very big moves. There's been expectation that the central bank would do a more aggressive move. Market's been waiting for it. This may be a little sooner than expected. And the expectation at this point is that you could actually see China get much closer to that 5%, roughly 5% growth that they'd been hoping for. As a result, you saw markets up sharply. The Shanghai Composite up by more than 4%. And in Hong Kong, stocks were up sharply as well. I think it was also a gain of more than 4%.
What do mortgage rates peg on? The 10-year, right? And the Fed can't control the 10-year. We've been moving up steadily ever since the half-a-point cut. It just shows you they don't really have control of the long end. But part of the rationale is to make housing more affordable with lower mortgage rates. We'll see. It's still early, but we're closer to 4 than we are to 3.5
after the cut. And
not sure
here's
what it
the
means.
30-year fix, 6.2%, I think, is what we were just showing.
I'm not sure what it means. I'm not sure it means that the bond market is still wary about inflation.
No, we had somebody who was trying to explain to us the other day that
aren't you still wary about inflation?
Yeah, I definitely, especially when you hear some of the news that Andrew is going to talk about right now, too.
Yeah. Let's do that right now. Boeing sweetening its contract offer to more than 30,000 striking machinists, saying it's the best and final proposal. The labor union criticizing the offer, saying Boeing didn't negotiate it and called it an attempt to bypass the union. Deal would boost general wages by 30% over 4 years. That's up from a previously proposed 25%, and also doubled the ratification bonus to $6,000, reinstating an annual machinist bonus and raising the company's 401k match. Now, Boeing said the offer is contingent upon ratification by 11:59 p.m. on Friday. The union said that time frame doesn't give it enough time to present details to members. It also said the company has refused to meet for further discussions, and it will not hold a vote on Friday. The union will, however, they say, survey members about Boeing's new offer. And I think what you're suggesting is this will turn out to be inflationary.
Yeah, I think
could be, yeah.
It's not just Boeing. There are strikes that are taking place all over. The port's potentially doing it. There was another airline facility that saw the manufacturing facility that saw a strike yesterday. With Boeing, I don't know if they can be more ham-handed about how they're handling this.
What's with the, we pulling this off? This is our last, and if you don't do it by Friday, it's off the table and you're back to where we were. It's just,
why? Because it seems like what they're offering.
Like when you're in contract
negotiation. Right. It doesn't matter what they're offering. At that point, you're like,
it's like, oh no, if I don't decide, if I don't, fold by then we're back to, any gains that we may have made, we're back back to square one.
You haven't heard anything about management sitting down.
Maybe that's the way you do labor negotiations. So
I don't know. Look, I understand them not having a lot of faith. It
costs a lot of money every day.
In this union leadership, I understand that entirely because the last one that they passed on to their membership got 4% of the membership to actually vote in favor of, 96% voting against. I get that, but what in the world is that? Like, it's gone from 0 to 150 instantaneously, from like, hey, yeah, let's talk about this, to, okay, take it or leave it, you're on your own. You don't hear of them sitting down with anybody and trying to hammer this out.
This might be inflationary too, and it also, I don't know, it's not very Republican, I don't think. Former President Trump threatened tractor maker John Deere with a 200% tariff if it moves production to factories in Mexico. It's in response to a question about Deere's recent announcement that it would shift production of some of its models to Mexico.
John Deere is going to, and anybody else that does this, because it's hurting our farmers, it's hurting our manufacturing. And if you do that, you're going to have a 200% tariff put on the product that you make in Mexico, right across the border. They think they're going to make product cheaper in Mexico and then sell it in for the same prices they did before, make a lot of money by getting rid of our labor and our jobs.
Sounds like industrial policy once again. A Deere spokesperson referred CNBC to a section of the company's website which is titled John Deere's Commitment to U.S. Manufacturing. And on that page it says, in Deere's words, in order to position our U.S. factories to undertake these highly value additive activities, it's sometimes necessary to move less complex operations, such as cab assembly, to other locations. And, there's been chapters written and Nobel Prizes awarded for comparative advantage. And it has...
Well, this goes back to the question, is it a free market? Is it not? How do you want the tariffs to work?
In many cases, we've outsourced a lot of jobs. And a lot of times it increases profitability because labor is much cheaper in other parts of the world. And you might be closer to the raw materials you're using.
I think Deere pointed out that they have spent a couple of $1 billion over the last couple of years investing in plants in the United States.
And it is possible that the low-tech, I mean, think about even chips. We're not going to make all the commodity chips here in this in this country. There's I don't know. Are we going to make sneakers? Maybe those gold Trump sneakers. But are we going to? If it's much.
Where are the gold Trump sneakers made, by the way?
I don't know. That's a good. I don't know whether they're made in the Nike sweatshops over in the Far Eastern or not at this point.
I'm just reading a little more about it. Deere's production moves have been a flashpoint for discontent among employees, though, as the company has aggressively shed expenses amid a weakening U.S. farm economy. They've trimmed about 2,000 hourly workers, or about 15% of
You do something like this here, and then something somewhere else, something happens, it's not great, and it's just I don't know. It's like so many policies that Democrats have that sound great on the face, and then you connect the dots to the unintended consequences, and a lot of times
it was like autos.
It's not good.
Do you want we have a lot of automobiles that are made in Mexico.
Yeah, we do. It's called comparative advantage, and there's times when it makes sense for a company to do something.
There have been changes where Chinese manufacturers are making things in Mexico and then flooding them in. And that could put the big three out of business.
And the new, the populist Republican 2.0 mindset is that we're protecting American jobs at all costs. And if it does cost a little more, we're still going to do it to keep the manufacturing. And you could say that, I mean, the whole J.D. Vance hillbilly elegy, that there is a huge swath of this country that feels left behind because of globalization.
Yeah.
But in the meantime, those jobs really coming to the U.S.?
That's what I'm saying. It looks good, feels good. Hey, 200%, better make it here. Illinois is going to be, rocking and rolling again, but then something else happens.
Right.
Typically.
And all of it is inflationary.
Yeah. I don't, great piece here about what screwed up our manufacturing. All those subsidies. I mean, the whole EV market, compared to when the IRA was passed, it's like a totally different demand profile now in terms of timing and everything else. And a lot of those things probably weren't very economically smart the way that we're doing it. It's not paying off. So Trump's going to speak today, by the way, former president, in Savannah, Georgia. He's expected to make a pitch to foreign companies on why they should move their manufacturing operations to the United States. Big port city down there in Savannah, huge. A senior Trump advisor tells us that he's going to highlight a 15% corporate tax for those making products in the U.S. Lower energy costs after some regulatory, easing some of the regulatory burden, access to federal lands if needed, and strong port infrastructure. That's the carrot. The stick, he's going to threaten companies who don't make products here with tariffs when they bring the products in to the U.S. So this is all, this is background on what's going to come out of the actual speech today in Savannah. And we'll talk to John Paulson about some of this. He may have had some input.
And he might have some thoughts just more broadly even about the John Deere of it all.
He wrote
He's defended the...
in the Journal last week. Total defense of this type of industrial tariff policy.
In his words, though, when he describes it, he, I think, describes it more as a negotiation tactic, too.
Right.
But we'll hear a little bit more about it.
Cheese will be next.
Coming up on Squawk Pod, a rare interview with billionaire investor and Donald Trump fundraiser, John Paulson. He lets us in on the economics of a second Trump term and responds to pushback that, policy aside, it's about who the candidates are.
This is not a race about character. This is not a race about a personality. Trump, when he was president, we had strong growth, we had low inflation, real wages grew, and we had peace around the world.
An extended, lively interview is right after this. We're back. This is Squawk Pod from CNBC. John Paulson is a billionaire hedge funder, a Wall Street legend who famously made a shrewd move in the days leading up to the global financial crisis more than 15 years ago. Remember the term mortgage-backed securities? A hot and maybe not that solvent housing market drove enthusiasm, exuberance even, over the funds sloshing around in Americans' drive to own homes. The instruments backed by mortgages were sliced, diced, and reinvested many times, and really vulnerable if anything happened to stop or slow people from being able to pay off the values of their homes. Paulson saw this risk. In 2006, he bet against mortgage-backed securities by investing in credit default swaps, a contract that a seller of a financial instrument will compensate a buyer in the event of a debt default. When the housing bubble stretched and squeezed and stretched some more and eventually burst, the value of Paulson's credit default swaps soared. He made an amazing trade. Paulson's fund reaped the benefit, and he personally made about $4 billion. And now John Paulson is a fundraiser and surrogate for the campaign of former President Donald Trump. He hosted a Palm Beach event earlier this year that made about $50 million for the Trump 2024 efforts and has brought John Paulson out of his shell, so to speak. The investor has long passed on media interviews. He was not really on TV. In fact, his appearance today on our TV broadcast was his first Squawk Box interview ever. You don't want to miss a moment. Andrew Ross Sorkin takes things from here.
We're thrilled to have you on the broadcast this morning. Thanks for joining us, John.
Hey, good morning. Glad to be here.
There's about a million things to talk about, including the markets and the Fed, but I want to start with this election. And I actually want to start with a headline that was made just yesterday by former President Trump, because I think we're all trying to understand his plans as they relate to tariffs. I'm sure you saw that one of the things that he said was that he plans to put a 200% tariff on John Deere tractors if, in fact, they were to move them and manufacture them in Mexico as opposed to here in the U.S. Obviously, he has a broader plan around tariffs as well. What do you make about this tariff plan? A lot of economists have questioned the level of tariffs that he would put on. I would also say other business executives have. And I would say just yesterday, Mark Cuban, in reaction to all this, said that he thought the plan was insane and a good way to destroy a legendary American company. So as an investor and somebody who's on Trump's side, what do you think of this?
Yeah, I think Trump's tariff plans are well-founded. When you look at the economists, they like the concept of free trade, but we don't live in a free trade world. U.S. has minimal barriers to import into the U.S., but we face substantial both financial, tariff, and non-tariff barriers when we try and export. So as a result, in 2022, we had a $1.2 trillion merchandise trade deficit. we've lost thousands of factories, millions of jobs to foreigners because of the unfair trade competition. So what Trump wants to do is create an American manufacturing powerhouse and using tariffs as a way to level the playing field. So in the case of Deere, we now have a merchandise trade deficit of $150 billion with Mexico. Many U.S. factories are closing U.S. plants, relocating to Mexico, taking advantage of the cheap labor, and then importing the goods duty-free back in the U.S. What does that do for America? So by using tariffs strategically, we can strengthen American manufacturing and increase real wages for American workers.
So, but what do you think of Deere's, for example, comment last night, which was to point people to the idea that there are certain types of manufacturing that they believe may even have lower value, if you will, lower value add, and that they want to sort of move up the chain. They want that to happen in the United States. They believe that the other manufacturing should happen elsewhere, and that it would hurt ultimately the company if they weren't able to do it this way.
Well, when you look at overall the policies, what you see is a hollowed out American manufacturing base. And we need to protect American jobs and protect American manufacturing. So the policies we have now are not leading to that outcome. We can't have American producers closing American factories and offshoring. July had another record merchandise trade deficit. So Trump's plan is to bring jobs back to America, bring manufacturing back to America, create incentives to produce in America, and that will result in more jobs and higher wages for Americans.
And you don't think it turns into a tariff war? I ask because we've gotten emails from viewers, some farmers in the Midwest who've said, look, what they worry about is actually that other countries are going to say, well, we don't want your exports, or we're going to tariff your exports. And so that it creates this sort of a race either to the bottom or to the top in terms of cost.
Yeah, that's the problem we have now. They've put in tariffs and non-tariff barriers for us, and we've done nothing about it. So it's a one-way street, and we have to make it a two-way street. And we have to protect American manufacturers the same way foreigners are protecting their domestic markets.
We've also talked a lot about taxes on this broadcast, including not taxing tips. And we've had a number of interesting conversations with folks around the table. And I'm curious where you land on that. And one of the things that people say is, what about a teacher or a nurse or somebody who is not paid an extraordinary amount of money, but does not get their pay in the form of tips, and yet a waiter or a taxi driver or somebody else who would be getting their income in the form of tips, maybe the exact same amount of money, would not be taxed in the same way?
Yeah, I think the Trump overall tax plan is to extend the very successful tax cuts he implemented in 2017 and to make them permanent. And his tax policy reduced taxes for all Americans, and he wants to continue with that policy. The proposals that he made today protect those that are having the most trouble meeting expenses in the economy. And his proposals allow the American workers to keep more of their hard-earned earnings. I'll give an example. Under Trump, real wages grew 7.7%. Under Biden, they've declined 2.1%. So the American worker is the most vulnerable. So the tax policies he articulated, no tax on tip, no tax on overtime, no tax on Social Security, they benefit the people that need the help the most to restore their income so they can meet the higher cost of living today.
John, what do you think of just the larger issue of debt and deficits and what some people are describing as a campaign on both sides, by the way, that is a great giveaway? That, every week we hear about a new plan to cut taxes or things of that nature, but there doesn't seem to be on the other side of it a plan to pay for it all.
Yeah, I think when you look at the record, the Trump record has been very responsible. Under his administration, we only had 1.9% inflation. Under Biden, it's been 5.7%. The deficit under Biden now is $2 trillion. So I think the Trump plan does have an effort to bring down the deficit, bring down inflation, and bring down interest rates. And I'll give you two examples. One is to reduce spending. And he's been very clear he wants to eliminate the Green New Deal. And economists estimate that will cost $1.2 trillion in spending as it's implemented over future years. He also has been clear he doesn't want to give any federal tax benefits to illegal immigrants. That will also save money. And lastly, we can't forget Elon Musk. He's probably the most brilliant businessman in America. He's agreed to head an energy efficient commission to bring down the cost of government. So those are three ways to bring down spending. On the revenue side, if we had an average 15% tariff strategically placed, that would produce on our $3 trillion of merchandise imports about $450 billion in annual revenue. And on the other side, if we have higher growth, that will also lead to more revenue.
John, two pieces. One is the Green New Deal, as far as I understand, never passed in a meaningful way. So I don't.
You're talking about the IR. I think you're talking about what they renamed as which, without a hint of irony, John, they renamed it the Inflation Reduction Act. Is that which one you're talking about? Or I mean, she did
exactly.
Vice President Harris did co-sponsor the bigger Green New Deal, but I don't know that's not what's
Can I just
law
one
right
follow-up
now.
as it relates to the tariffs? Because you talked about strategically using the tariffs. At least our understanding of it, and a lot of the way these tariff proposals have been "quote unquote" scored by economists, is a broad tariff plan, not necessarily one that looks at an industry by industry or even item by item. And I think one of the reasons people say, well, could be a tax on the American public, is there are industries, unfortunately, which we, the American public, are not in manufacturing yet. And so the question is, yes, it would be great to induce more folks to manufacture here, but the time it may take to actually get that to work in a meaningful way is going to have at least a short-term cost, if not a longer-term cost, right?
Yes. So I think the 10% is an average tariff. Tariffs will be allocated strategically, first to industries that are essential for our American industrial base and for our defense industry. We can't buy critical minerals from potential adversaries. Second, we have to level the playing field in industries that we haven't had fair competition. And using tariffs will restore a level playing field.
Well,
so
yesterday he leveled it at John Deere, too. I mean, that was, are we going to see one-offs? You're talking about an orderly form.
Yeah, that would be targeted. We want to keep American companies manufacturing in the U.S., and if they're going to close U.S. factories to relocate abroad, particularly in Mexico, take advantage of their cheap labor, fire American workers, that's not a policy that Trump wants to support.
But it seems like
and I think it makes a lot of sense.
John, some of it could be inflationary if it was, not done carefully. The other thing that we have so much disagreement on, just in the economic literature, is who pays tariffs, and when that criticism is levied that it's the American consumer, not China or somebody else that's going to pay the $450 billion, and it's going to be through higher prices, and that's going to cause inflation. How do you counter that? And it's an effective argument they use. They just roll there's an entire group of economists and voters who roll their eyes when they think that you can tax other countries instead of just taxing American consumers with tariffs.
Yeah, I would roll the eyes the other way. When you look at what's happening, China's growing maybe 3 times as fast as we are. They're gaining jobs. Their economy is growing, while our economy is stuck in stagnation, and we're losing jobs. So our trade policy has not benefited American workers.
John, I have a different question, which is, some people who are watching this broadcast are looking at the policies of former President Trump, and they're comparing them on paper to the policies of Vice President Harris. But then there's this other question that looms over both of those pieces of paper, if you will, And some people say you shouldn't even look at the policies themselves. You should look at the person, and you should look at the character of that person. I want to read you. This is Barry Diller, who I'm sure you know is on the other side of you on this as it relates to his view of Donald Trump. But he actually commented directly on an interview that you gave. And he said he, meaning you, went on sensibly for 25 minutes. What he never did was talk about the character, the person. Not a word about that. Not even, well, he says a lot of crazy things, but he doesn't act crazy. What he actually did, and what these others do, is they refuse to talk about the character of the person and distance their talk from this person's policies and justify just on policies, not on the character of what is arguably a rotten person. What do you think of that?
Well, you know, I don't agree with that, but this is not a race about character. This is not a race about a personality. Trump, you know, when he was president, we had strong growth, we had low inflation, real wages grew, and we had peace around the world. So I think he's proven to be a very effective leader. And I would look at his record and his policies in terms of, you know, choosing the candidate.
But in terms of the character, I mean, you can go back and look at the long list of people who worked with him who no longer will vote for him, who have called him all sorts of nasty names, including people very high up, you know, that have defended this country. I'm just curious how you think about that, how you think about the January 6th piece of this, because there are CEOs right now who are even planning for what the aftermath of this election looks like, not just for their businesses, but actually thinking to themselves, you know, what happens if a Harris wins and former President Trump says that it's not a real win, and the sort of angst and craziness that could ensue.
Yeah, I don't think anyone should have angst. They can look at he's already been president for 4 years, so we have a very good track record of what his presidency would look like. I think if President Trump is elected and we implement his policies, we'll have an economic boom. We'll have a rebirth of American industrialization. We'll have peace around the world and a much stronger economy, which everybody benefits.
So you don't see, a CEO said to me yesterday, former President Trump is, quote, high beta versus low beta. And basically his argument was that if you look at President Trump, he said, look, it could end up and be very, very good on one end, or it could be absolutely horrific and the end of democracy on the other. And this person said, with Harris, it might be good to okay, or it might be marginally bad to okay, but that those are two sort of distinctive things. And he said, one's more risky than the other. Do you not see it that way?
Absolutely not. You know, I'll go back to repeating, we've had 4 years under Trump. It was a very low-risk environment. We had economic growth, rising real wages, low inflation, and peace around the world. We've had almost the opposite of that under the Biden-Harris administration. In terms of democracy, it's the Republicans that are asking for voter integrity. They want free and fair elections. So I think democracy will be very safe under the Trump administration.
What do you say then even about the comments that Vice President Pence made at the time, or has made since, talking about democracy, talking about the idea that the former president wanted to have him hung, for example, or didn't want to certify the election?
Yeah, I can't comment on, I'm not familiar with Vice President Pence's comments.
John, that one thing I might answer. If I went back and literally looked at 10 former positions of Vice President Harris, it absolutely curls your tongue now, or curls your toes. Now, you can say that she's evolved or something, but between getting rid of ICE, making it not a criminal offense to cross the border and stay in the United States without papers, to abolishing ICE completely, defunding them. I mean, just go through the list, John. If you want to talk about a possible horrific future, you got 4 years of Trump, you know exactly what happened, and then you've got her on record saying all these things that no longer apparently matter since she became the replacement to Joe Biden. So, I mean, it wouldn't be hard for me to bring up, you know, what happened on January 6th. He said, fight, but make it peaceful. Do not do it. Now the narrative is that
I think
but all
Vice
these
President
narratives
Pence will disagree with you.
Okay, Vice President Pence. How about
Rex Tillerson
find people on both sides?
Matheson would disagree. I mean,
you brought up Mark Cuban and Barry Diller. Do you think that?
No, I'm bringing up names of people who worked for president.
I'll bring up John Paulson.
30 people.
John Scott. I'll bring up John Paulson and Jay Clayton and Gary Cohn and dozens of others. You can't cherry pick lifetime Democrats that have TDS to make your point on.
I guess as the window ended, I don't think John cut it off because it stopped right
John's
at
like, I'm getting the hell out of here.
No, I think the window probably
that's
closed
right.
to 55.
That's definitely.
There are something like 30 or 40 people
Fine.
who have said
and there are others that did. There are others
who
that
worked
did
for him, directly worked for him,
I
who will not
understand
work
that.
for him, will not vote for him.
You're just TDSing.
No, it's not
frothing
TDS.
at the mouth. Yes, it is. We understand that. There are people like that. There's also half the country that has litigated what you're saying and doesn't agree.
Right, and then there's half the country that doesn't. And so if you're going to have a supporter on, you want to ask these questions to try to understand where they come down on why they think what they think about him. Because there's a whole group of people in this country who look at this and don't understand it. And so part of what I, by the way, am trying to do is I want to understand why people think what they think.
You've made that clear with when we have someone who supports Trump. I understand that. The character issue always comes back. You've asked how can, as a human being,
I also think as we talk to
you think it's
Senator
appropriate
Coons,
to say, as a human being, how can you vote for Trump?
No, but I also think as we
that.
discussed with Senator Coons, why does he think what he thinks? Should we have more details about some of these plans? Do we understand these things in the way we should if voters are going to the ballot box effectively even today through the mail?
To come back to the character issues again and again and again, we've had presidents that may not be the perfect character. We've had Bill Clinton for 2 terms. We've had I mean, go through the.
Then there's a question.
But a lot of it is a mainstream media narrative that you will put forth as factual. Like,
if you were a board of directors, the question is, would you hire this person?
You've got plenty of board of directors that are on. Probably more corporate types secretly would rather have Trump because of his policies.
And I think we're going to find out about that. And that's interesting. And we should see and talk to more CEOs who think that.
We will.
And whether they'll say that publicly. It's very interesting. Why wouldn't they say that publicly, by the way? That's actually very interesting. Because if they actually believed it, and they thought this was a person of good character, they should be out there saying it.
Because they've got companies, because they're like Michael Jordan, that Republicans buy sneakers.
Of course they do, but then they should be.
You don't want to take half. You don't want to.
Oh wait, he's
okay.
Back.
Let's get back to John. John, welcome back. You stayed. Okay. Comments?
Well, I heard your conversation. I think this is about, coming back to American core values. We want to protect our border. We want safe streets. We want American manufacturing powerhouse. We want energy, low energy costs. We want low utility costs. We want growth and prosperity for all Americans. And I think Trump has that plan. It's a common sense plan. It's relatively simple. But if given the opportunity to implement, I think all our Americans will be much better off.
But you're ignoring the whole. You heard the other side, the character, the TDS is just a short-term word for what it is, but it's a real thing. It's a real thing.
Let me go back to character. Let me go back to character. Trump cares about the average American. He shows up at funerals when people are killed. He's a warm. He's humorous. But above all, he cares about America and Americans, and that resonates with a lot of people. So I would disagree on his, on how other people view him. I think he'd be a great president, and he'd be a great president for all Americans.
Hey, John, we only have 30 seconds, but I have one big market question as an investor. Obviously, we just had this interest rate cut. There's expected more cuts. Where are you on equities right now in terms of just how you're thinking about this marketplace?
As I said before, it very much depends on the outcome of the election. If Harris is elected and she increases corporate taxes, increases the marginal tax rate, increases capital gains taxes, and God forbid, put taxes unrealized gains, I would be very negative on the outlook for equities. If Trump's elected, I think all systems go. We'd have a very bullish economy.
Are you surprised then at just where the equity markets are right now then?
Not necessarily, but I think there's a lot of fluff, and if something comes to change the tax policy or the direction of the economy, I think the markets would be vulnerable.
John, we very much appreciate your time this morning. We look forward to talking to you again, I hope, very, very soon. And thank you very much, and we'll talk to you again.
You're listening to Squawk Pod.
Up and Andrew, Q.
Welcome back to Squawk Box. Meta Platforms planning to announce that it has secured deals with actors including Judi Dench, Kristen Bell, and John Cena to give voice to its Meta AI chatbot. It's according to a Reuters report that says that the announcement is coming at Meta's annual Connect conference, which begins tomorrow. The audio feature will offer users the option to select from the celebrity voices, or you could get a generic voice option, if you will. OpenAI showing off a similar feature for its chatbot back in May, but if you remember, it ran into trouble when actress Scarlett Johansson accused the company of making it sound eerily similar to her, even though she had declined an offer for the chatbot to use her voice. It sounds like this is an actual licensing deal, though.
Yeah, you could get Princess Anna to be speaking to you through the chatbot.
Kristen Bell, yes.
She's from Frozen.
I didn't know. That was what I was going to say. I wouldn't know Kristen Bell's voice from.
Well, you haven't watched Frozen 700.
I haven't watched it. I don't think I haven't seen that one. Actually, it's beyond.
I watch it every day.
But are you getting Kristen Bell, the actress / podcaster now, or are you getting her doing the Frozen voice?
But if you're just hearing her, like you may not think Princess Anna every time you see her, but if you hear her, I don't know.
That's why Scarlett Johansson was good, because she already played like a her.
Right.
Yeah.
With Joaquin Phoenix.
Yeah.
Joker too. I've seen Joker. I don't know. I keep watching Joker on. I've got problems.
You do. You watch Joker a million times. I
know.
watch Frozen a million times.
I don't know why.
It changes
I don't know.
your perspective on life.
He's amazing, and because I'm on a plane, and I don't know what else. So I watch Curb Your Enthusiasm too.
Well, that's pretty good.
Cheryl Hines, Mrs. Kennedy.
We are watching shares of Levi Strauss.
Isn't it?
Take us down these rabbit holes that I don't even know how to.
Yeah.
One thing leads to the other. It's all linked.
Oh my goodness.
And that's the pod for today. This week marks 5 years of Squawk Pod. 5 years! In September 2019, we launched CNBC's first daily podcast, this curated audio version of our 3-hour morning show. We were so young and innocent, with no idea of the stories we'd be featuring right here, like a once-in-a-century pandemic, years of physical separation from our colleagues, the GameStop craze, much more. The insights of investors and politicians and celebrities, it's been an incredible opportunity to bring Squawk Box's best interviews, discussions, commentary, even bad jokes, right into your ears for you to listen to anytime. Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin. This podcast happens and has happened every day for 5 years, thanks to a busy team with day jobs and the willingness to turn their closets into voiceover booths. That's me, Katie Kramer, Cameron Costa, Zach Valisi, Caroline Rahotis, Claire Odomodi. John Lesration is our jack-of-all-trades / emotional support editor, and he has been with us since we started playing around with podcasts in the summer of 2019. Thank you. Thank you to our team, and thank you for listening. Let us know any thoughts or comments. You can tweet us at Squawk CNBC, rate or write a brief review of us on Apple Podcasts. We love to hear from you. Have a great day, and we'll meet you right back here tomorrow.
We are clear. Thanks, guys.